Registered and paid up capital, how much you need and why it matters. Let's talk about money. In China, every company must declare a registered capital. That's not a tax or a fee, it's a promise, the amount you commit to invest into your company over time. So let's break it down. What are the requirements for registered capital? There is no universal minimum. Here is what you usually see on practice. Sensitive industries like finance, for example, may need much more. Now, here is the good news. You don't need to pay it upfront, but you do need to fully pay it within 5 years of incorporation. So don't write a random number. Declare what you're actually ready to fund over time. Why does this even matter so much? Because China has strict foreign exchange controls. Chinese companies, especially new ones, especially with high-risk owners, cannot freely receive or send international payments. Those activities are tightly controlled. So registered capital is the cleanest way to bring money into China. When you wire this money onto your company account, the bank treats it as capital contribution, not revenue. That means no taxes. Now compare it to another method, transferring funds via service agreement. For example, your Chinese company needs money to operate. It signs a service agreement with foreign client, maybe your own other company. That's allowed, but it's taxed as revenue. You need matching invoices and contracts. It might raise questions if it doesn't match your scope, and you actually need to provide these services. Otherwise, the bank can reject that payment, which happens very often with founders labeled sensitive. So if you're going to invest anyways, it is smarter to contribute it as a registered capital. Here, let's talk about face, Miànzi. In Chinese culture, face matters. Face is how serious, reliable and long-term your business looks. Your registered capital is one of the first signals people see. Suppliers, partners, even government officials, they all look at it and they think, is this company here to stay? Can we trust them? Are they a serious player or just trying things out? So if your company has 100,000 RMB and your competitor shows 1 million, guess who gets more respect? And one more thing, FDI, Foreign Direct Investment. To transfer registered capital into China, you need to pass a process called Foreign Direct Investment Approval, FDI. In theory, this is standard. You submit a form, you get approval, you send the money. It should take a few weeks. But in practice, not for everyone, especially not for founders from countries that China considers risky. There is no law that says Nigerians or Lebanese can do it. But if your passport or company is from a flag jurisdiction, Chinese call it sensitive, you will face long delays or rejections without explanations. Real case from our work. I was a director and legal representative of a client's company in China. We tried to transfer registered capital for over a year. No approval, no rejection, just silence. Eventually, in private conversations, we got the answer that that was because I'm Russian. So we changed the director to a Chinese citizen. It still took another year to get approved, but we managed to do this. This shows the complexity of Chinese laws. They are vaguely written. In practice, Chinese society often follows unwritten rules, and you need to understand them when doing business with China. So FDI is a real hurdle, especially if you come from a sensitive country. Make sure to check it with your consultants or agents whether you'll be able to do it. And if you cannot, there are 3 options. 1. Global situation will change and China won't consider you sensitive anymore. 2. You find other ways to fund your expenses, make real business, show good numbers, and eventually Chinese authorities will trust you and allow you to transfer your capital. 3. You also start without it and eventually reduce the registered capital. This isn't something a Chinese official or bank will tell you. Remember, it's not clear law. So if you can't do it at the beginning for some reason, then eventually you will find an individual solution together with your local tax office, bank and foreign exchange administration. What happens if you don't pay registered capital on time? Until recently, most companies in China declared large capital but never paid it. That's changed. Now it is limited to 5 years from a date of incorporation. And if you don't meet the deadline, here is what happens. First, a public warning. Then you may be listed in the enterprise abnormal list. It affects your credibility. Then penalties to the company, legal rep and shareholders. And in serious cases, forced closure. They will revoke your business license. Your reputation in China will be ruined. Remember though, 5 years is a long time. If your business is successful, you will find a solution. So how do you decide how much to declare? Simple. Think about how much money you will need to invest before the business becomes profitable. That's your number. Then you may raise it if you need to match local competitor, but still it should make sense for your setup. So, to recap, different industries, different expectations. Registered capital is tax-free. It might take a while to transfer it. Miànzi matters. Capital shows you're serious. High-risk founders will face FDI barriers and solve them individually. And it is reasonable to define its size as the capital investment. That's it for capital. In the next video, we'll talk about office requirements, what kind of office your Chinese company really needs, and why your bank, your tax bureau, and your local suppliers all care about your address. Subscribe, share the video with someone who needs it, and let's keep going.